Offer nights are back to the norm. We're seeing it all the time. What's up, everybody? It's Jordan from the JP Homes team at RE/MAX. It is the middle of March, and I am here with my take and my breakdown on the Toronto Real Estate Board's numbers for February 2020. So let's get to it. The year so far has been off to a great start. The real estate market's been booming, it's been on fire, and things are doing really well. Now, we have some things that we'll talk about now, and we'll get it off the plate. We've got a big thing going on in the news right now, the coronavirus. I'm sure you've heard of it. And we're talking now, it's something on the minds of everybody. And how is it going to play into and affect the Toronto real estate market and how sales and prices perform over the next couple months? So it's something we're keeping a close eye on. I don't think it's going to have too large of an impact, but we'll see how big and how broad it gets and what the actual impact is here. So that's that, but let's jump into the numbers and see what we saw in February. February was gangbusters. We saw a 45.6% increase in sale transactions year over year from last year. So we went from 4,900 sales in 2019 of February to 7,200 sales, which is a huge increase. Looking here month over month in 2020, a 14.8% increase in the sale number. So a good sizable increase there too, but that's a number that's really interesting, 45.6%, and we're going to talk about that in another minute as we scroll down here as well. Now, looking at average selling price and what the prices are right now, prices are up from January of 2019, 16.7%, from 779 to 910. This is also putting us up in a price range that is very reminiscent of prices that we saw back in this time of year of 2017, which, as most of you remember, was one of the hottest times in the Toronto real estate market. So very interesting similarities and some things we're seeing, which we're going to touch on in a minute as well. Seasonally adjusted month over month, prices up slightly January to February, which is pretty steady, nothing too concerning there. This is the number that I find really interesting when we look at all three of these numbers, is the total new listings in February year over year was up 7.9%. So we had a total of 10,613 new listings on the market in February compared to 9,800 last year. But if we take a look at this number, this 7.9% increase, and scroll back up and compare it to this 45.6%, there's a big discrepancy between the increase in in new listings and the increase in sales. And the slowdown of the new listings to the market is what's really putting that upwards pressure on prices and causing all of this interest and demand in the market. And as we know, the supply and demand is causing a lot of this multiple offer situations that we're seeing, and a lot of this competition that buyers are now starting to face again back in the market. So another thing that's really reminiscent of the market that we had 2 or 3 years ago back in 2017. So sales are up. And days on the market, which we'll look at here quickly as well, is down 36% because of that whole strategy that we're seeing a lot now with the multiple offer process, which is shortening the amount of days on the market. So like I mentioned, we're seeing some similarities back to what the market was in 2017. Prices are up in that range, which is very interesting. Listing days are down. Inventory is still low. One of the things that I find really interesting that I was talking to some people about the other day, and I actually put a post this morning on Instagram about it, is in the market in 2016-17, there was a large majority of buyers, and the market was strongly fueled by investors buying property. Buyers are out there, investors are out there just trying to buy anything that they could, which was really putting upwards pressure on prices. Now, with the market that we're in right now, my question that I put out there was, do you think that investor pool is the pool of buyers that's fueling this market right now? Or is it an end user buyer pool that's fueling this market? And in my opinion, what I feel right now in my, as I'm out there and I'm dealing with people, is that it's more of an end user base that's fueling this increase in prices. The demand for buyers to buy property that are looking to move in and live themselves is much stronger, and it's much more of a larger pool and feeling that I'm getting than it was back then. And I think there are a couple reasons that are causing this. One, there are a lot more incentives that the government's put out in the last year or two to really try and help first-time buyers get back in the market. Interest rates were reduced last week and are at an extremely low rate. There's talk about them even going down a little bit further. And also, there's a pool of people and a group of buyers that bought condos and pre-construction condos 4, 5, 6, 7 years ago that those units and those condo units have been steadily growing over the last 5 or 6 years, while the detached market and the low-rise market has kind of taken a little bit of a hit. So for those people, the equity that they've built up over the last several years has really made the gap a little bit smaller in terms of jumping from that property into a low-rise detached or semi-detached property. So that's another group of people that's coming into the market, and it's a little bit easier for them to get into the market at this point. So a lot of stuff going on in the market, but when we break it down and we boil it down, if you're a buyer in the market right now, you are probably seeing yourself competing on properties night in and night out. Offer nights are back to the norm. We're seeing it all the time. New listings are still slow to come to the market. So from a buyer's perspective, if you're a buyer, be ready. Have your financing arranged. Have your agent prepare you with the listings and sales in the neighborhood, and have an expectation of what property should be selling for. If you're looking for a home in a specific neighborhood and there's a house that's listed at $1 million, but you look through and all of the recent sales are at $1.5 million or higher, don't expect to get that house for $1 million or $1.1 million. You need to really have proper and accurate expectations of where you can be so that you can actually be competitive in the market. And if you're a seller right now, let's get going. There's still a shortage of properties available. As we move into the spring, I think more properties will start to come to the market. How many is yet to be determined, we'll see. But there's still a huge opportunity. If you're ready to sell, now is the time to take advantage of this demand. As I say every month, real estate is very neighborhood specific, so things will change from one neighborhood to the next, and the numbers we're looking at here are averages. So if you have questions on your specific area or your home, give me a call, get in touch, and I'm happy to talk to you about what the values are and what the best strategy is to get your house sold. If you're a buyer looking and you have some questions, please feel free to get in touch with me. I'd love to help. And until next month, have a great month.